Hello, it's Tristan here from ZebraInvest, and today I'm talking all about vendor finance. If you haven't heard about it, it's a great tool to be able to use when you're looking at negotiating properties where you've got motivated sellers. So what I'm going to do is cover what vendor finance is, how you can use it, finding the right type of seller, types of vendor finance, ways you might be able to structure a deal, and then how you can actually negotiate the deal, and possibly where to even find those deals at the end. So what is a vendor finance deal? So the whole idea really is that you're approaching the seller who's probably got some equity in the property to ask them to help lend funds to you to act as the deposit to purchase it. So it could be in the case that say they've got a property that's worth £400,000, you agree to buy at £400,000, and actually the deposit would be, you need £100,000, but you're actually trying to say to them, look, will you lend me £100,000? I'll buy the property off you, and then over time, I'll pay that £100,000 back to you. You can come up with the terms and agree them between you. You need to make sure it's going to work for both of you. It's got to be a win-win. You need to make sure they're happy with getting the sale across the line and get it moving forwards. But it's also got to work for you at the same time, because if the numbers don't stack, is not going to work, and it's only really going to work in a few circumstances. The type of property that you're usually going to be looking at is going to be something where they might have a portfolio of rental property that are being sold off. It could be something where they've got a commercial building that they've finished and sold their business, but they've now got the commercial building or a site. It's going to be something where they're not emotionally attached to it, they're not living in it, and they don't necessarily need that cash down the line. So when it comes to it, you need to find the right seller, and there's plenty of places to find this. I'll mention that at the end. But the right seller needs to have a decent amount of equity in the property, and that's kind of why I suggested these kind of portfolio properties or stuff that's been rented out or held for a long time, and they've just got fed up with it. They, don't want the hassle of it anymore. And it's usually going to be good if they've paid most of it off, or they don't have much of a mortgage at all on the property. And it really, you need to make sure, as I've kind of pointed out already, the seller does not need the cash straight away or all of the cash straight away. They can have some of it, but not all of it straight away. And it really is going to be when you found someone who's struggled to sell, it's stuck around for a while, or it's something where there's a bit of a problem with it. And last year, I actually agreed and got a purchase across the line, working with a chap called Andrew, and we bought this property just over in Chedgrave in Norfolk. You can see it here, and it's a beautiful property in numbers. The bit with it, when you come down and have a look at this, you can see the problem was they were originally asking, and you can see, you can't quite see it, but they were originally asking £1.6 million for this property, had 8 commercial shops, 13 garages and 4 flats. And it was a great opportunity, but it just stuck around and stuck around and stuck around. And the main problem with this property was actually where the income, and you can see it right there, was £51,324 per annum. The issue was, as soon as you look for a commercial mortgage or a commercial loan on it, there's very few lenders who were going to actually lend on it. So it needed a bit more work, a bit more management to be able to get that across the line. But that's quite a good example. The property is stuck on the market for a long time and it hadn't really moved. And so that was why it was a good property to go for. So typically there's 4 kind of types of deals that you can do when it comes to vendor finance. The first one is going to be unencumbered property. So exactly like this one, where the property was owned outright by a family. They actually had a few people who'd come together on it. And when it came to the purchase or the sale, you could do it where actually you buy the property off them, and then on the day it comes through, they can lend you all of the money to buy the property off them. It might just be they want it done and dusted. They want someone else to take over it and look after the property. You could then pay a monthly mortgage to them, like each monthly fee. It could be repayment, but you can structure that how you might like. And then it could be that you go off then, and the way that you're thinking about adding value and refinancing out this is actually going in, improving the property to then be able to refinance and lift the value of the property at the end of it. The other bit they could do is they could do something where you've got a property's already got a mortgage on the property, and what you do is you could turn around and buy the property. Say, for example, you've got a new mortgage or something else going in. You take a new mortgage out on the property, and it then pays off all the amount and debt they owe. They might still have some cash left in the deal, which effectively becomes your deposit. They lend you that money, possibly like a second charge, to then put that deposit into the property. Again, you then got your mortgage, but the idea is you are going to be trying to use this alongside something like a buy, refurbish, refinance, or somewhere where you're doing a bit of asset management to increase the value of the property at the end of it. The other way you can do it is if you do something called a private loan, so where they lend you money back after the purchase is completed, and that's exactly what we did with Chedgrave. What we did was we went in and we turned and said, look, we'll buy the property off you for this amount, and then on the day it completes, we would like you to lend some money back to us, and that would allow us to go in and refurbish the property. The other bit we did with Chedgrave, we actually also extended and put new leases in place before we bought the property to lift the value of the property before we even bought it. So we combined both open market value bridging along with vendor finance to then be able to put as little cash into the deal as possible and use the money that the sellers were lending back to us to be able to pay for the property. And then the other thing you can do as well is you can do something where if you've got a good relationship with the seller, is it might be that you want to buy the whole property off them, but you actually need to cover your costs to be able to buy the property before you buy it. So you might turn and say to them, look, would you be willing to lend me, say, the legal fees to be able to help buy the property and some cash to go in towards the deposit to buy the property? The mortgage company and your broker is going to have to know exactly how this is working to make sure it's all above board and working. But there's plenty of opportunities and deals out there like this. So how do you actually do the vendor finance deal? So you need to sit there, and when it comes to offering with them, you need to make a clear offer. It's something I learned from a chap called Kevin McDonald. But what I did was I go in with two offers. So one offer is the cheeky price. It's the price that you're willing to pay with, say, a mortgage or with bridging loan. So in this case, I said, well, look, how about I offer you £700,000 and we're done, dusted and sorted. Or I'll offer you the asking price, but what I'd like you to do is we'll pay you £700,000 a day and you'll lend us £100,000 back on the day it goes through. And the reason I knew this would work on this property was actually we added value to the property before we bought it. The garages, a lot of the garages are rented for probably about £20, £30 a month. All of the garages, pretty much all of them before we bought it, increased from 30 up to £80 a month. We have 13 garages, so you can see that's an extra £650, at least £650 a month income from there. Each of the shops were all on short tenancy agreements. Banks tend to like leases. And so what we then did there was we put commercial leases in place. They were all then at the market rents. And again, we then increased the value there. And by doing all these bits together, we then increased the value of the property before we bought it, pairing bits together to get those opportunities together. So you can always try making a little bit more of a cheeky deal and trying to structure it differently. The one thing I would make sure you do is when you do offer, make it as simple as possible. You don't need to explain all the ins and outs of this, because if you do, it's simply going to put a seller off. So if you turn and say, look, we'll offer at this price, or how about we do this, and with the seller, or would you lend me some money back when we actually buy the property? You can sort of say, we can put a second charge in place, you've got security there, and then just go through it that way. And then when it comes to it, you will need a good accountant to help you out along the lines. If you're going to structure anything a little bit more creatively, then reach out to Pandy & Co in Southampton. Talib down there and Dan there will be able to help you out. So where on earth are you going to find these deals? I mean, so the first bit I wanted to show you, and it was simple as you can see here, was this deal was literally sitting on Rightmove. It was a property that has sat around for quite a long time. But the way in which I actually found the property was heading right over to, you guessed it, my favourite, property data. So I simply headed over there, clicked onto my saved search area, and then this one was slightly out of area, but I'll go through the same process. I went for the local data, and then this then opens up all properties in my area. I went over to what you can do is on your pound per square foot. And this property appeared on the very top left of my screen. And the top left is usually the largest property at the lowest price. And these are sometimes picked up by property data as commercial properties, as I'm going to try and see if I get another one there. There we go. We've got a couple there by the looks of things that are just picking up. And the reason I went for these was, here you go, this was bang on, high street retail property, and again, 600,000, it's a massive property. And in Norwich, I know it's worth around £300 a square foot, so that's quite a lot below market value. And again, here there's another one. You can see again that's gone up in price. They've put it up, but again you can see it's a large property. And I saw it was such a large property in the area. It was completely different to any other property. And I kind of looked at it. I was like, well, what's gone on with it? And to give you an idea, with this one, this would be a good example. It's been on the market for quite some time, hasn't had much movement, decent sized property. And you can then kind of look at it and think, well, what are the rents on it? What else can we do with this property to improve it? So usually I like stuff that's oversized, underpriced. If you also like stuff where it's had, for example, price reductions, I'm just going to jump on here. So price reduced, and this property that I looked at, and I'll do the same, just a live search for you so you get the idea. Go to 30 miles. And we're going to be able to have a look for those properties that have had the biggest amount of price reductions reduced by, and hopefully this means that we've got to have the biggest reductions here at the bottom. And if they've had a lot of reductions, the chances are they're getting fed up with the place. They want to get rid of it. So let's have a look here. How much of a reduction of this? Reduced on the 5th. Hopefully, yeah, 15% already. It's had quite a few reductions, and you can see straight away just a number of reductions. That person is gagging, they're desperate to get this place sold. It's now down to 170,000, and there's plenty of other opportunities like this, and you can see them all over the place, ready to go, ready for you to kind of pounce on, reach out to. All of the sellers might not be open to it, but they are certainly the people to be talking to, because they're the ones who want to sell the property stuck around, and there's going to be equity in it, because otherwise they wouldn't have dropped it so much in the first place. So the last thing, just to wrap up, is just make sure if you are looking at doing any deals like this, you do speak with your broker, run through it and explain exactly what you're trying to do, how you're trying to do it, and go through from there. Keep it simple when you talk to the sellers and the agent, because the more complicated you make it, the less likely the deal is going to go across the line. And if they do ask you detailed and in-depth questions, explain that we can chat to a solicitor. If we agree to this in principle, we'll chat to a solicitor and we'll get it all drawn out later. And understanding their needs, the seller's needs, absolutely crucial. And make sure you keep in touch with them throughout the whole of the transaction. Keep them aware of what's going on, and so they buy into you, understand you, and that transaction goes all the way through. The last thing I'm going to say is, if you do want to head over to Property Data and find opportunities like we've just found, jumping on there, you can head over for a 14-day free trial. Head over, and if you use the discount code ZEB, you're going to get the first month half price. I'm going to put that little coupon just in the below and the link. So if you want to head over there and try it out, be my guest. I really hope you found this vendor finance video helpful. If you do like it, please smash that like button, subscribe to my channel, and hopefully I'll see you soon. Cheers. Bye.